Welcome to Corelogic's update on housing market conditions for July 2019, brought to you by First National Real Estate. The latest housing market results presents an early sign that lower mortgage rates and improved sentiment are already having a flow-on effect for housing market conditions. Last month, Corelogic's National Housing Market Index moved closer to levelling out, with values down 0.2% over the month. That's the smallest month-on-month decline in the national series since March 2018. The subtle rate of decline was heavily influenced by trends across Sydney and Melbourne, where the pace of falling home values has been consistently reducing over the year to May, before posting a subtle rise in June. Sydney values were 0.1% higher, and Melbourne values were 0.1% higher over the month. This was the first positive month-on-month movement in these cities since their respective market peaks back in 2017. The only other regions to record a rise in housing values over the month were Hobart, with an increase of 0.2%, as well as the regional areas of South Australia, where values rose by 0.1%, and Northern Territory, where values increased by 0.2%. Importantly, the improving conditions through to mid-May were largely organic, predating the positive boost in sentiment following the federal election and interest rate cuts in June and July. No doubt the cut to interest rates, as well as the confidence boost following the federal election outcome, are factors that have supported the improving trend. On a quarterly basis, every capital city housing market has recorded a drop in values, highlighting the broad geographic scope of this housing market downturn. The largest falls over the past 3 months were recorded in Darwin, down 3.6%, and Perth, down 2.1%, where the weaker trend has persisted since mid-2014. Adelaide recorded the smallest decline amongst the capitals over the quarter, with values down 0.4%. In another sign of stabilising conditions, settled sales activity appears to be finding a floor, albeit well below the decade average. Based on an estimate of settled sales, the trend towards fewer sales is flattening, with settled sales activity over the June quarter roughly level with the trough recorded over the past 2 market corrections. Auction clearance rates have also been on an upwards trajectory, reaching the low to mid 60% range across the combined capitals over the second half of June, implying a better fit between buyer and seller pricing expectations. Clearance rates have shown a material improvement over the year to date, but remain well below the levels associated with strong price growth. Although clearance rates have lifted, it's important to note that auction volumes are substantially lower than they have been over recent years. Importantly, auction results are highly correlated with conditions in Sydney and Melbourne, but provide less insight into the smaller capital city market dynamics, where auctions are a much smaller component of market activity. Adelaide's housing market has remained a relatively steady performer, with housing values slipping 0.4% over the June quarter, which was the smallest quarterly decline amongst the capital cities. The performance across the unit sector has been slightly stronger relative to houses, with unit values tracking 0.9% higher over the past 12 months, while house values are down 0.5%. Looking at the market across the broad valuation cohorts, it's the most affordable quarter of the marketplace where conditions are the strongest, with values up 1.2% over the past 12 months, while the upper quartile is down 1.6%. To date, most of the improved housing market performance observed by Corelogic has been centred in Sydney and Melbourne, where economic conditions are generally stronger than other parts of the country, and where unemployment is much lower and jobs growth has been higher. New South Wales and Victoria account for more than 80% of Australia's jobs growth and are the 2 states where unemployment is below 5%. Population growth remains strong in both states, supporting housing demand. These are also the 2 markets where housing affordability remains the most challenging, despite the drop in prices. The median dwelling value in Sydney is 8.4 times higher than the median household income, and in Melbourne, dwelling values are 7.6 times higher than household incomes. Credit availability will remain a key determinant of the housing market's performance. Although housing credit growth appears to be stabilising after a steep decline, tight credit conditions are the new normal and will continue to dampen market activity. Lenders are progressively becoming less reliant on average household expense benchmarks, and prospective borrowers should expect some scrutiny of their balance sheets during the loan application process. Additionally, with borrower debt profiles becoming more transparent via comprehensive credit reporting, lenders will have greater visibility of total debt levels relative to borrower incomes, including credit card limits, mortgages with other lenders, personal debt, and auto financing. Borrowers applying for debt that is greater than 6 times their income may find it increasingly difficult to secure a loan. Overall, lenders are going to have a lot more information than they have in the past in order to decide whether or not a borrower is creditworthy. Overall, we are seeing some positive indicators in the housing market, but most regions around the country are still experiencing weak housing market conditions. A more broad-based housing market improvement is reliant on a firming of labour market conditions outside of New South Wales and Victoria, as well as a broad strengthening in economic conditions more generally. Lower interest rates should help to support this objective, but it's becoming increasingly clear that monetary policy isn't going to shore up the economy on its own. Pressure is building on the federal and the state governments to ramp up investment in key infrastructure projects that will have the dual benefit of creating jobs, as well as improving productivity and making affordable housing more accessible and more desirable. We'll be tracking progress on the housing market in plenty of detail, and you can access all of our research and data at our website at www.corelogic.com.au.